In this video, traders, we're going to look at what happens when a stock gets delisted. Stay tuned. Hey traders, warm welcome to you. If you subscribe to the channel, appreciate your support. Okay, so this question is, what happens when a stock gets delisted? Let's look at why it might be delisted, then what actually happens after delisting, and what happens to your money if you happen to have those shares in your portfolio. Let's go. Okay, so many, or in fact every single exchange has specific rules and criteria that a company must meet to stay listed on that exchange. For example, NASDAQ, NYSE, LSE, all of those have their own rules that are all around keeping a company that's got a good financial standing. It hasn't got the ability to commit fraud easily. It's of reputable nature, all these kind of things. It's being transparent with their documents and all this kind of stuff. And so you can understand why they have this on there. So for example, NYSE has stuff like the minimum number of shareholders. In other words, there's a certain number of shareholders that has to hold the stock in bunches of 100 shares or more. You can't just have one share per holder. They're looking to see that there's a good selection of shareholders that can't kind of grab it and corner the market, so to speak. And they've got a decent amount of number of shares between them. Minimum market cap, pretty self-explanatory. Minimum share price. This is the one that catches most people out. For example, New York Stock Exchange says that if you trade under $1 for 30 consecutive days, you're out. And other exchanges have different rules on that, have to keep a minimum share price. Yes, they can do reverse split. And by the way, if you haven't checked that out, go and check out that video. But generally speaking, there's got to be a minimum share price. And also document filing. They've got to be transparent about what they're doing. Got to file the documents on time, their accounts, all the other stuff. There's plenty of things that need to be done to be traded on an exchange. So what happens when a stock gets delisted? So you've got a voluntary delisting. And I put good in question mark here because it's potentially good. It depends on the circumstance. You might say, as the company might say, hey, you know what? We don't want to be listed anymore on the exchange. And for reasons could be, we're going private. In other words, we're taking it out of the public hands. It's not public anymore. Public can't buy shares. We're taking it private. I've got private investors or whoever it may be, in which case they don't need to be traded on an exchange anymore. There might be a merger. So often two companies may merge and they might convert into one share that's a merger of the two. They might be just bought out by one, in which case they come under the umbrella of the company that's buying them out. And so that will be delisted. So that could be a good reason, and some sort of restructuring. So they could be potentially bullish reasons why the stock's been delisted. Now, let's look at the bad reasons. And these are pretty much all bad. If you've got an involuntarily delisted, if you have been involuntarily delisted, it generally means you've broken one of the rules that we talked about. And there's just some, by the way. So let's say your share price or minimum market cap has gone below the level required and you are going to be delisted. That's probably because you are in poor shape financially, right? If you're not meeting the requirements, if you're not filing, something's going wrong with management, if you haven't got a minimum market cap, that's not really good because you're obviously burning money and the valuation's dying. That's going to be bad, right? And so what happens then is it will be delisted. You don't satisfy the requirements. There'll be some notice set out and no more trading will take place. The important thing to remember is that you still own the shares. So you still have a legal right to those shares. It just means that you can't exchange them. You can't trade them on the exchange. The exchange is just a facilitator for buyers and sellers, right? That's the only thing. You still own the shares. Whether you want to own the shares is another question, but you do still own the shares. So now they move to over the counter. And over the counter, basically to buy and sell these shares mean you have to trade through a market maker by telephone. Maybe you can do it online, but ultimately a market maker is making the market for the buy and the sell side, and you have to go through that as opposed to an exchange where, yes, there are market makers there, but as a buyer, if I've got direct access, I can put my order in and the volume is generally thicker, liquidity's there. It's much more of a pleasing and easier way to buy and sell than through market makers. And they become harder to sell. You've got to go through a market maker, so there may not be so many buyers waiting. The spread's going to be wider, and obviously, if it's been delisted, potentially people are, they think that this company may well not be doing very well, and there's probably going to be more sell side activity than there is buy side. But you still own the stock. Unless the stock goes bankrupt, unless they run out of money completely, you still own it. So you still own that chunk of the company, or how many shares you own, you still own that regardless. And that doesn't change, just say, just it changes the mechanism which you can buy and sell it. So theoretically, you still have a value. If those shares still have a value, then you can still, if you can sell that, you can realize that value. But of course, you've got to find a buyer for your shares. You've got to find a buyer for what you believe the price is worth. So that's what happens when a stock gets delisted, guys. If they break the rules for any reason, then they will be involuntarily delisted, generally a bad thing. If for some reason they decide to withdraw from exchange, that could be a good thing, potentially gone private, merger, or some kind of restructuring. Not always good, but more than likely there's going to be there's a valid reason for it. It could be a good reason for it. All right, guys, that is what happens when a stock gets delisted. See you next one. Take care. Bye-bye.